One big question. Why was Cardano in the spotlight in the first place? Right from its inception, it won the hearts of many experts and investors. What were we made to believe about Cardano ADA from the beginning? Something happened in 2020. This is when the Cardano founder, Charles Hoskinson, posted a tweet about the Cardano ecosystem getting a couple of things right in the following year. However, 1 year passed and there was no pop. He was eventually called out for failing to fulfill his promises. But do you know this was when you should have bought ADA? According to a blog post in 2021, growing concerns over Bitcoin's sizable carbon footprint put green cryptocurrencies into the spotlight. Cardano was a suitable option, but this was not its only advantage. Sustainability was also one of the interesting things about Cardano. This fact hasn't changed. One of the things Charles Hoskinson is very passionate about is economic accessibility. This is one of Cardano's missions. According to Hoskinson, there are billions of people in the world who can't open bank accounts or access affordable credit, and he's aiming to solve that. The breadth of what Cardano is trying to achieve makes it difficult to sum up in a few sentences. Hoskinson calls it the Swiss Army knife of protocols that solves real problems. Just think of Cardano as a platform where people can build applications that address a whole host of issues, from preventing counterfeit medicine to enabling access to microfinance. The Cardano network opens the way for people to use blockchain technology to improve the world we live in. Now, if you're getting confused about Cardano, then you definitely need to see this. Unlike Bitcoin and Ethereum, Cardano uses the proof-of-stake model to mine new blocks in the chain and verify transactions. Only a fraction of the people who own Cardano can actually mine ADA, which dramatically reduces its energy consumption. By contrast, Bitcoin's proof-of-work model puts no restrictions on the number of computers that can mine. So as a currency like Bitcoin becomes more valuable, more companies invest more computing power into mining it. In a blog post, it was noted that, on the other hand, it is early days for Cardano. In all the crypto hype, it's the memeable coins like Doge with celebrity endorsements that are getting the lion's share of attention. That said, Cardano does have a loyal following. Hoskinson says there's almost 1 million people in the community. There's still a lot of work to be done. However, Cardano may have a much more solid technical base, but it also missed the first mover advantage. We are feeling that exploring these reviews is highly needed for this season. If you're waiting for a pump in the ADA coin price, then you'll need to check the reason why you joined the bandwagon in the first place, and how resilient you're going to be in the days to come. Yes, there are reasons to hang on. Altcoins are pumping. Recently, Dan Gambardella, a crypto analyst, revealed that Cardano and Ethereum would trigger a full-blown altcoin season as soon as Bitcoin dominance falls. Gambardella supported his thesis on previous cycles where both cryptocurrencies registered notable increases before other altcoins joined the club. According to the crypto analyst, Ethereum would soon start outperforming Bitcoin. He noted that when this happens, ADA would join before other tokens like Ripple XRP and Solana Sol move. However, the analyst noted that Bitcoin has not yet slowed down its dominance. So let's just say that we're all waiting for Bitcoin. In early 2021, the world's largest cryptocurrency, Bitcoin, flew past $50,000 per coin for the first time. After falling about 75% from its all-time high in the inflation-powered crisis of 2022, the cryptocurrency had a lot of ground to make up. However, on February 12, Bitcoin finally surged past $50,000 once again. Also, Dan Gambardella took to X to spread the news about the Avalanche network getting hit by a major outage, and to praise Cardano as a stable, strong network in light of this event. Gambardella talked about Avalanche facing major outage, while he emphasized that Cardano remains stable and strong no matter what. He further stated that he likes AVAX, and Cardano is a big part of this investment portfolio. He often tweets about Cardano and ADA, spreading a bullish sentiment about them. Gambardella also shared his belief that institutions sooner or later will begin to invest in ADA, since it has a unique peer-review research approach that has ensured a resilience and reliable foundation. Also, the price of Bitcoin is rising at an incredible pace. It is up more than 130% over the past year and up more than 20% in just the past month. At this rate, investors fairly wonder if Bitcoin can surge past $60,000 before the summer. Well, when it comes to the future price of Bitcoin, the key question to consider is whether there will be a wave of buying demand from new and existing adopters. In 2021, there are many entrants into the crypto market just because FOMO was on the rise. However, this is not a solid reason to trigger buying demand. In this season, many reasons are fueling the Bitcoin surge. The first 11 Bitcoin spot ETFs were just approved and began trading. These spot ETFs could enjoy rapid adoption because they allow people to invest in Bitcoin as they would invest in stocks, thus reducing the complexity of investing in them. According to data from CoinShares, inflows into these ETFs are picking up steam, with more than $1 billion in weekly inflows. Institution adoption is another point to consider. Companies such as MicroStrategy don't fear being among the early adopters of Bitcoin, given that the tech company has held over 190,000 Bitcoins as of February 5th. Even institutions that used to be against Bitcoin are now warming up to the idea. For example, BlackRock CEO Larry Fink once said that Bitcoin was an index for money laundering, but more recently, he praised it, calling it digital gold in an interview with Fox Business. Between Bitcoin ETFs, institutional adoption, well-funded crypto operations, and among other things, billions of dollars are currently being used to buy and hold Bitcoin. Simply put, there is high demand. Moreover, Bitcoin halving is almost here. With this, the rate of new supply gets cut in half about every 4 years, and the next halving of mining rewards will take place around late April. If the demand for Bitcoin holds steady or grows, the price of Bitcoin could surge with the new supply gets cut in half. This sudden spike can then trigger buying from investors, with crypto FOMO expanding the spike even more. Investors like Cathie Wood are extremely bullish about the halving. In a recent interview with Yassine Elmendra, ARK Invest Director of Digital Assets, Wood unveiled a rarely discussed detail of Bitcoin's next halving event that could change the game for the cryptocurrency market. She noted that Bitcoin's halvings have always heralded a sharp increase in the cryptocurrency's price, and this is so true. For instance, one Bitcoin was worth $12 on the first reward cut in 2012. 1 year later, the price peaked at $11.70 before backing down again. And the 2016 Bitcoin halving set prices from $640 to $19,650 in 17 months. The latest reduction in mining rewards that took place in May of 2020 for $8,600, 18 months later, that price cycle topped out at $67,500. Of course, past performance is no guarantee of future results, but Bitcoin breaks the rule of thumb in some ways. The crypto market as a whole, especially Bitcoin, still faces numerous headwinds and challenges. The progress of digital currencies can stumble on legal and regulatory roadblocks, slow uptake of crypto-based services in the consumer market, and unexpected technology jumps. There are many more, and there are potential game breakers too. But the steady rhythm of the scheduled mining reward halvings will continue regardless, resulting in rock-solid stability or the end of the Bitcoin world. In Cardano's case, it has not only proven itself as a consistent top 10, but has also proven itself as steady. Decentralization is one of its main targets. Cardano has been celebrated for its decentralization, ranking it as the second most decentralized assets in the cryptocurrency industry. The evaluation, which came from a decentralization index by crypto researcher Justin Bonds, gave ADA a score of 35 out of 60, trailing just behind Ethereum's 43, but surpassing other contenders like Bitcoin, Solana, and Ripple. With this report, Charles Hoskinson responded with a nuanced take on the matter. He contended that opposition to IOHK should not be equated with a measure of decentralization. Instead, he argued that what truly matters is the governance of the code and its transformation into a robust open source project with the contributions from multiple entities, not just IOHK. Decentralization is in folds, and it sums up many things. Cardano shines in several of these aspects. It boasts a high unique validator count and a network fee of permission elements. Its native delegation system and the impending implementation of on-chain governance demonstrate its commitment to a decentralized future. However, the perception of limited pushback against IOHK raises concerns about the political decentralization of the network. ADA's score reflects its robust structure, which includes a high number of unique validators and a strong stance against permission elements. With on-chain governance on the horizon, Cardano is poised to enhance its decentralized nature even further. So you didn't come to the party late. This actually seems like the best time to buy Cardano, and for seasoned Cardano investors, this is also the best time to hold on. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.